Is there a way to tell the difference between reversals and pullbacks market structure wise? That's a phenomenal question. So, do you have specific examples in mind or no? Because it's largely going to depend on bigger picture structure. 1104 pullback or reversal. So down here, maybe. So you're asking about, like, let me see. Let's see an example here. So here's one way we could kind of break this down. We have what I look for when I'm expecting a full reversal is, number one, I need a key level of interest at the very least. I'm not expecting the market to bounce in this case substantially versus the overnight low. This level right here is the overnight low. Let me just mark it so we're clear. Pre-market low, right? So I wouldn't really expect a lot of follow through on this move. This type of move, especially with the trend, the intraday trend already pointing down, I expect a little bit of a bounce here, right? Most likely it's going to roll over, which is what it did. And we'll get that test to 630. Now, with 630 being a major area of support, I do expect a reversal down here, especially with this type of bar that comes in. Now, when price is actually into 630, there's no way to know 100%, right? This is where risk management really comes into play. And so, excuse me, what I'll look for is how price actually does respond to that level. And I want to see volume, in this case, really stepping in. A lot of market participants stepping in at that area. I want to see a super strong signal bar. And then from there, what I need to see is an intraday change in character. So I need price up and through the most recent lower high, which is going to be through here. There's your intraday change in character. And then I also want higher time frames. Now, the more higher time frames that you can align with that actual area where you're expecting the reversal, the better off you're going to be, right? So once this green bar is in, right here where my cursor is, that was that bounce at 630, we could say reasonably that there's a reversal underway for, at the very least, the next 15 minutes, maybe 30, maybe 45, and I'm just taking it bar by bar at that time. Now, the other thing to understand is how all of the time frames kind of fold into each other. So we saw that change in character on the 2-minute. The 15-minute won't show a change in character until way up here. Way up there. That's the most recent lower high. Right? And so once you start to see some exhaustion like this, it's like, all right, well, that kind of intraday bit of reversal is done. It's done. So the case then could be made that this entire bounce was just a pullback within this near-term downtrend. Hope I didn't lose you on this. Is that making sense? Yeah, so it all starts with location, trade location. Big one, super important. And remember that 630, where is it coming from? If I zoom out, oops, you'll see all the support through here. Let me flip back to the hourly. Right, we see all the support through here. So I know, like, I could just look at the chart, price has memory, say, yeah, buyers showed up here before. I can reasonably expect them to on this first test today. Now, again, reversal. All right, I need on the hourly price up through this high. You get kind of that hourly time frame shooting star there, and it's time to short again. That's that afternoon drift higher that I talked about. So fold in location, your lower time frames, kind of see that signal, and then your intraday, that regular trading hours change of character. And then from there, how are the higher timeframes really developing and favoring your idea?